Welcome to North American Ag Spotlight. I'm Chrissy Wozniak. My guest today is the Senior Analyst in Horticulture for Rabobank RaboResearch. He's responsible for analyzing the U.S. and North American fresh fruit and vegetable industries. With a strong background in agriculture, he previously served as Deputy Director of Economic Research for FIRA, Banco de Mexico, conducting comprehensive analysis on the ag sector for over a decade. And his expertise spans ag market integration, consumer trends in fresh produce markets, food security, and food price dynamics. Additionally, he has experience as a professor at Tecnológico in Monterrey. He holds a bachelor's degree and along with a master's degree and a PhD in agriculture economics from Texas A&M University as well. And I had the pleasure of hearing him speak last fall at the Association of Agriculture Consultants Conference in Fresno, California, where he gave a very insightful report on the economy and the state of the industry. Today, we're going to discuss the current issues facing producers, particularly in veg and specialty crops, but also how it affects the larger economy. From Fresno, California, I would like to welcome David Magaña. Welcome, David, and thank you so much for being here. I really look forward to this conversation.
Yeah, thank you for the invite. Yeah, definitely a lot of things had happened, impacting not only agribusiness but the general economy as a whole, and also consumers and how do we things and how do we buy, we eat, and we do business. So yeah, excited for this opportunity and looking forward to the discussion.
Awesome. So let's start out with your background. You grew up as a farm boy in central Mexico. Tell us about that.
Yeah, that's great. I grew up on a small diversified farm in central Mexico, mostly growing corn and also some vegetables. Then I had the opportunity to go to an ag school in Mexico. And then I got a couple of graduate degrees in ag economics from Texas A&M University. So I've been involved with ag all my life. And now what I do is I'm the senior analyst covering fresh fruits, vegetables, and tree nuts for RaboResearch. I'm based in California. I've been with the bank for the past 6 years, but I've been doing this type of applied economic research on agribusiness for the past 20 years.
Great. And prior to joining RaboResearch, you served as deputy director, as I said, for Banco de Mexico, focusing on ag sector analysis. So can you share some key insights or experiences from your time in that role that shaped your approach to analyzing the fresh produce market here?
Mm-hmm. Yeah, my role was about covering all the agribusiness segment. So all the way from farm inputs to including other sectors such as sugar, animal protein, and obviously fresh produce as well. And then I was conducting research and also delivering some presentations all across Mexico. And then I got the opportunity to be part of the RaboResearch and then just specialized in one sector. This is the one that I mentioned, fresh produce, and getting to be familiar with a lot of exciting industries here in Central California. So yeah, my previous experience was very useful to take on this on my current role.
Right. Yeah. And your presentation that I mentioned last fall was titled Economic Forces Shaping the Future of U.S. Agribusiness, Short-Term Challenges and Long-Term Opportunities. It was an excellent presentation. And you mentioned in that presentation that the industry is facing pressure from various factors, inflation, regulatory changes, conflicting consumer demands, which is something I never really thought about. So how do you see all of these pressures impacting our industry?
Yeah, if we do a recap of what has been happening over the past few years, we see this massive collision of forces between the supply side with pressures on resources, particularly some regulations, water challenges, land constraints, labor challenges as well, And as we observed over the 2 years ago, a severe crisis in terms of logistics bottlenecks. So lack of availability of containers, very expensive to ship from U.S. ports and globally, and that also colliding with strong demand side forces. So yeah, but I mean, just like global middle class continues to increase, and consumer expectations are higher now. So we have this massive collision between supply side constraints and demand side forces that led us to multi-decade inflation over the past 2 years. So if we take into consideration what happened in 2022, in many sectors, in many geographies, we had these challenges in terms of logistic constraints, very elevated input prices, severe drought, for example, in California and other places as well. And as I said, lack of availability of containers that didn't allow the industry to export as much as was needed, and impacted some industries more than others, particularly the tree nut industry in California that relies heavily on export markets. So moving into 2023, we saw a change in the set of challenges. So we went from very dry conditions in 2022, deficit irrigation, severe drought, to having a year ago in 2023, pollination challenges, a series of atmospheric rivers that hit California, and then growers went from being in too dry conditions to then dealing with floodings and trying to maximize water recharge. So seemingly a very different set of challenges in terms of on growing conditions. But at the same time, another set of challenges remained similar, which is persistent inflation, elevated interest rates, consumers trading down given these sticky consumer prices. And still, we were discussing with any economist, and they were still saying, yeah, we see a potential recession in the cards, and they've been saying that for the past 2 years. So basically, the industry has been facing now some demand challenges and margin pressures in different industries. Now, like probably it's a good segue to discuss about the how some macroeconomic variables have been moving over the past few months and what we expect for 2024. So as I said before, just like persistent inflation was the conversation of every day for the past 2 years. And now we've seen that after reaching the highest level in 4 decades, the consumer price index, the CPI, has been declining. So just as an example, the food at home year-on-year price variation dropped from around 13% in mid-2022 to 1.3% in December 2023. So we're seeing that core CPI is slowing down, but we expect CPI inflation to remain above 3% in 2024. And that is because supply side factors and sticky shelter inflation will contribute to that. So, for example, housing has been far more resilient than expected, and also consumer expenditure. Nevertheless, inflation is likely to continue to converging towards the 2% target in 2024. So that's good news. And obviously that has some implications in terms of monetary policy that we can also discuss.
Right. Yeah. And you highlighted the, the complexities um, about consumer expectations, and particularly regarding year-round availability, organic produce, reducing plastic usage. Um, so that's all things that we, as an industry, we need to keep in mind that the consumer is kind of driving forward, whether it makes sense to us or not. Some of the things seem crazy to us. Some of them are do make sense. But how can growers and retailers address these kind of conflicting demands, but still remain profitable?
Yeah, well, that's a great question because now several industries have been now feeling the pressure of oversupply. We can mention, for example, now seems like in 2023 there were the apple crop was larger than expected and larger than in the previous year, bringing prices down. So there is price pressure on a lot of different commodities, and you need to keep quality consistent. And probably you're referring to a set of seemingly conflicting desires that I mentioned that consumers have, right? That on the one hand, they want fresh produce year round, but at the same time, they want it to be locally grown when that is not possible. And also, they want perfect quality, but at the same time, they want it to be organic or with less use of pesticides, things like that. And also they want more convenience, but at the same time they want the industry to reduce the use of plastic, and on top of that, like to have affordable food in top of all those challenges. So that continues to be a challenge for the industry, and the only way to that growers will remain profitable is through innovation and also to increase efficiency. So I'm excited to see how all those how the industry will be increasingly adopting new technologies to be more efficient, to reduce the need for labor. That is another challenge as well, and to make more efficient the labor that is available. And now, for example, artificial intelligence offers a huge amount of applications that at this point, I think we will be surprised how many applications we will see in the next months or years. Some applications that are hard to imagine at this point. So yeah, as I said, innovation will have to continue to be the key. But bringing this back to the macroeconomic forces, obviously for all this investment that is needed to bring innovation and remain efficient and competitive, obviously the cost of capital is a key factor to monitor. So having said that, and bringing the discussion back to these macroeconomic variables, we see that the inflation is been coming down, and the economic growth continues to be surpassing expectations. So the U.S. economy in 2023 grew more than 2% year on year, and for 2024 we're expecting something about 0.7% increase. So unlike previous economic cycles where a recession was needed to break the backbone of persistent inflation, this time soft landing seems like it's a true possibility. So we are expecting that if we face a technical recession, we are expecting it to be just a couple of consecutive quarters with negative 0.1% variation or something similar. So given this backdrop of inflation above 3% and unemployment below 5%, the incentives for an aggressive easing cycle in terms of interest rates are not particularly strong. So we see that interest rates will be cut this year 3 times. So we're expecting 325 basis point rate cuts in the second half of 2024. That is in June, September, December. And also it is worth noting that rates are not high from a historical perspective, although those increased quite fast and higher than many were expecting. However, we don't see a return of to a 0% Fed rate, and instead we're expecting a cycle low of about 3 or 3.5% in the next few years.
Yeah. Okay. Well, that's good news. Um, you also explained the trouble of El Nino and how it will impact different areas of the globe this year. And I can say that your prediction for the Southeast US was dead on. Here in Florida, the sun it didn't come out for weeks during Christmas, and it was our first time experiencing that here. It's always sunny every day here. So it's been cold and rainy despite this is normally our dry season. So I know you were totally right about that, about it being cold and wet over here. So how do you see the weather going, or will that remain a problem through 2024?
Well, it's always challenging to predict the weather a few weeks or in advance, not let alone months or years. However, given the this cycle and the prevalence of El Nino during the 23-24 winter season, we were expecting, for example, the weather in California to be cold and wet. So it hasn't been as cold or as wet as many would have expected. Right. So just to mention, just a brief recap of what I said before, 21 and 22, where we were in the middle of a severe drought in California and other places as well, but I will focus on Central California and Southern California. And then 2023, we had an exceptionally wet year. So 13 atmospheric rivers hit the state during the winter. And then we had an unusual amount of snow and rain. So the snowpack was 200% of historical averages a year ago. So that is at the beginning of February 2023. And this year, this winter, December was rather dry, and we had some rain in January. And we also, we just experienced a couple of atmospheric rivers over the past few days. But just to see the contrast, the snowpack 2 weeks ago was 60% of historical average. So we are still not on the historical average. So definitely it's been drier than expected for an El Nino winter. We'll see how this the rest of the water year continues to be. But at this point, we are now approaching a very critical season, that is the almond bloom season. That is just starting these days, and weather conditions during pollination determine in a big way the yields for this year. So now, we're expecting some favorable conditions for almond pollination, and we're likely going to see larger crop in 2024 compared to the previous 2 years that were exceptionally challenging. 2022, very dry, as I said, and 2023, it was during pollination season, the weather conditions were it was raining, or it was cold, or it was windy, or all of the above. So that really reduced bee activity during pollination, and that was reflected in lower almond yields during the 2023 year.
Yeah, makes sense. Very interesting. And what opportunities and challenges do you foresee for the US in the international market? And what steps can be taken to enhance our competitiveness?
That's a good one. That goes in the areas of challenges and opportunities that are always present. But for example, for this year, um, we've seen that the dollar has been quite strong against many currencies. So the exchange rate obviously is a key component of U.S. export competitiveness. So despite that increase, that strength of the dollar against the euro or the yen and the yuan, we've seen that exports have been tracking well. Particularly if we see almond exports, pistachio exports, those have been tracking well this market year so far. Just as for instance, pistachio exports year to date are up 102% compared to the shipments last year. So we see some consumer confidence that is improving, as well as always like good logistics always help with exports. So on the other hand, if we see in terms of exports and U.S. competitiveness, I can mention, for example, the exception of exchange rates in terms of strength of foreign currencies is the Mexican peso, which has been outstandingly strong over the past few months. And given that strength of the peso, that improves the competitiveness of U.S. exports to Mexico. So that is key for diverse industries. For example, Mexico is the primary market for U.S. dairy products and also for U.S. apples, and now for U.S. potatoes, for U.S. fresh potatoes, the Mexican government now granted full access to fresh U.S. potatoes into the Mexican market starting last year. So now we've seen exports to Mexico increasing, and given this favorable exchange rate, Mexico is likely to become the largest export market for fresh U.S. potatoes in the next year or so. So surpassing Canada. So that is in terms of competitiveness. That's a piece of good news. And on the flip side, there are some factors that may impact logistics and already disrupting logistics. So, such as geopolitics, right? Particularly what has been happening in the Middle East, in the Red Sea, that may cause significant disruptions in global trade. Because particularly all the trade that is going from China to Europe has to go through the Red Sea and then the Suez Canal. So there are some disruptions there, as there are now. If that continues, that may cause some lack of availability of containers, because now some of these vessels will have to travel all around Africa to go to Europe. And that will put additional time and additional cost. So, and potentially it will be needing like this container taking twice as much time to get to the final destination. So those containers, instead of making 3 or 4 round trips, now that's going to be reduced probably to 2 round trips. So we may be seeing hopefully not as big of a problem as we observed in by the end of 2021 and during 2022, all these logistic bottlenecks, but those disruptions are not going to help with competitiveness, with cost, and with availability of containers. I mean, situation is different now because some of these big ocean carriers, they have been investing to increase the capacity. However, any of these disruptions is not going to help. So that's besides all the potential volatility that we will see in terms of energy prices and potentially input prices as well. So those are the risks that are looming going into the 2024 crop year.
Yeah, good points too about that. And hopefully, well, I know a lot of manufacturers, a lot of companies have shored up their, their dependence on foreign products and are sourcing things from the US now, which hopefully will give us a little bit of a buffer when those things start happening, if that
Definitely the onshoring, friendshoring, or nearshoring, whatever, however you want to call it, that's been a process that it's been intensifying over the past couple of years, given the massive disruptions that we observed since COVID, and then in the period between 2020 and 2022. So, and we will continue to see some of these friendshoring, onshoring occurring in the next few years. So particularly, some companies are relocating to the US, but mostly some of those are also relocating from Asia to Mexico. So we will see that that trend to continue. And having said that, that will have some ripple effects as well in terms of the labor markets, because the demand for labor, although is not the same labor pool as in as farm workers, but the demand for labor will continue to increase in places such as Mexico.
Right. Yeah. So I guess there's a lot of bright spots, and then there's a lot to be wary of. So what is your advice to growers in 2024?
Well, just like highlighting the bright spots, seems like now finally inflation is coming down from persistent elevated levels in the past couple of years. And seems like also fertilizer prices and input prices are going to have been coming down from elevated levels in 2022, lower levels in 2023, and we're expecting, barring any disruption from these geopolitical aspects, we are expecting fertilizer prices to be more affordable in 2024 compared to the previous two seasons. So just to highlight that one, and also the cost of borrowing will start to decline by the second half of this year. So that's another piece of good news for growers. So yeah, try to make the most out of that, and have a good management of all the resources. But I mean, if we go back to what I said before, that we had some oversupply in different industries. Just to mention, in the past few months, I've been able to go to different conferences, and seems like at this point we're producing too many apples, too many walnuts, too many table grapes, too many wine grapes, things like that. So on the one hand, that seems to be one positive aspect, is that the industry is so good at what they do that is sometimes seems like it's easy to oversupply a specific market, right? So now the opportunity is just to be growing any specific crop wherever you are the most efficient, and not try to just producing marginal areas or things like that. So that's a challenge for the whole industry. Try to see where you can be efficient enough to remain profitable and not to, obviously, is challenging to identify the business cycles where you are like either in the oversupply or the deficit side. So that's a challenge for the industry. But I mean, highlighting again the bright spots, we are now seeing that in general, some macroeconomic aspects, including the cost, have been coming down. So given now inflation coming down, we see consumer confidence is likely to improve. And so on the demand side, that's another positive aspect to highlight.
Yeah, that's great. And also tell us about Rabobank and what you guys do and what you're all about.
Yeah, so Rabobank is a bank based in the Netherlands, and we have presence in almost 40 countries. And outside the Netherlands, we only do food and ag, which is being the core for the bank. So you will not see a Rabobank branch outside the Netherlands. So we merely focus on food and ag. That's what we do best. And two things that make Rabobank unique. One, I already mentioned, focus on food and ag. So we are fully committed to this industry. We are not here just to diversify risk, but is all we do. And it's all we've been doing for the past 125 years.
Wow.
And another aspect that makes Rabobank unique is a large RaboResearch group. So I'm part of a group of analysts that we globally cover all the links in the food value chain, starting from farm inputs all the way to consumer foods and everything in between. So as I said at the beginning of this conversation, I cover fresh produce and also tree nuts, and I'm part of a global team. So I have colleagues in South America, Australia, New Zealand, in Europe, and we collaborate and we do research, we publish reports, and we supply those free of charge to our clients as a value add to their relationship.
Yeah, amazing. And I have one last question for you. Why do you serve the industry and what are you most passionate about?
About the industry, well, I really like the mission that Rabobank has, is growing a better world together. So if we can have a positive impact on the industry and feeding the world and producing sustainability, producing food to feed the world, that is what drives me. That gives me motivation, and I'm passionate about this industry. I've been involved, as I said, I've been involved with the ag industry all my life, and this is what I like to do, and yeah.
Yeah, well, that's great. And so where can people find you and where can they find Rabobank?
Well, Rabobank, you can find online, rabobank.com. My email address is david.magaña, Magana, at rabobank.com. And I also have a LinkedIn account with my name, David Magaña. And you can find also some of the summaries of the reports that we published online. So our group, we call it like Food and Agribusiness Research, also known as FAR within the bank. So you will be able to see some of the summaries of the reports that we published, and the full reports are exclusive for our clients. So as I always say, if you're a Rabobank or Rabo Agrifinance clients, you should get those. And if you're not a client yet, don't worry, we can fix that in the near future. I apologize
Good
about
point.
the shameless plug.
Yeah, love it. Well, thank you so much, David, for joining me today. Great information.
Thank you for the opportunity.
And thanks to all who are watching or listening. If you want to learn more, the links are provided in the show notes. And don't forget to subscribe to North American Ag Spotlight on Spotify, Apple, Amazon Listen Notes. And you can also find us on Rumble, YouTube, or Telegram, and wherever you listen to podcasts. If you like this episode, I'd love it if you shared it. Have a great day.